You know that sound, the closing bell at the New York Stock Exchange, capping off another trading day there on Wall Street. Let's bring up the big board and see where everything lands. You know, the Dow rose actually about 100 points in the final hour of trading, but as you see, the numbers just settling. The market's really pulled back just slightly there as the bell rung.
Yeah, both the S&P and the NASDAQ staged a late day rally, not quite enough to end us up in positive territory, however. Joining us now is Laura Sanicola. She is an energy reporter for Reuters News. Laura, thanks for being here. So tell us, what was the big driver behind the markets today?
Yes, well, thank you for having me. Earlier today, OPEC Plus announced that they were going to cut oil production by about 2 million barrels per day from November. Now, according to our calculations, the cut will be more equivalent to about 900,000 barrels per day, which is still significant, but not as big as the headline figure, and that's really based on how much OPEC is currently complying with their production targets. So they're a little bit under compliance levels. So it'll be slightly lower cut, but still grabbed the market today. It elevated crude futures. Brent settled up about $1.50. So not an incredibly significant increase in the close today, but still was up about $1.50.
And it just seems like a bit of a mixed bag because the market was pulling back most of the day. There was a slight rally in the last hour, and now we're ending effectively flat. Outside of the OPEC announcement, we know that for a lot of folks, that means increased energy costs this winter. But we know that Goldman Sachs, JP Morgan Chase also reported some losses. What else is in the mix on the mind of traders right now?
Well, oil traders are really trying to understand the impact of these cuts and where the market is headed come this winter. There are growing fears of global economic recession. And in a big way, OPEC's decision appeared to be trying to come out ahead of a potential economic slowdown and really defend a floor for Brent crude futures as they've been sliding about $30 from highs over the summer. So it is a bit of a mixed bag because it's still unclear what an economic slowdown would look like, the effect interest rates would have on the economic slowdown, and ultimately other factors that go into what consumers end up paying for their fuel prices, such as weather events, for example. If we have a warmer weather, that might have an impact.
Well, let's stay with that for a minute, Laura, because I think our viewers are more likely to be concerned about the cost at the pump, if they're fueling up their cars, the cost of heating their homes, especially as we're heading into the winter season in so many of our markets. How is all of this going to affect them?
That's a great question. In terms of motor transportation fuel, it's not really clear that it's going to have a major impact. Fuel prices have been falling pretty steadily since the summer. They've risen in some regions of the U.S. due to, in large part, regional refinery outages as refiners undergo maintenance. If the cutback from OPEC does end up having a significant increase in price going forward, you could see prices rise a bit at the pump. But again, it really will need to be in tandem with some other factors, such as a very cold winter that raises the demand for heating oil potentially, or more of a loss of Russian oil from the market. So it's a little hard to tell, but I would say that fuel prices at the pump may not be as affected by the cut as feared.
And you're right. It depends where in the country you are. The national average for gas right now, $3.83. In California, it's average $6.42 per gallon. So folks out west certainly suffering. Laura Sanicola, thank you very much for joining us today.
Thank you for having me.